Hey traders, this is Benjamin Arbab and I'm here to review a couple of mid and large cap stocks that were in play last week. We're going to review DLTR, Dollar Tree, Roku, SQ, MU, KMI, PAGS, KORS, DSW, and DKS. Without further ado, let's go to the very first one, DLTR, Dollar Tree. And this week it was, wow, it dropped pretty hard. I'm looking right now into the weekly chart, and this weekly chart we are seeing this huge monster red candle drop down there. However, it's getting close to its SMA 200 down here, and also retracing back in Fibonacci level back to 76.77. So obviously we're going to see a little bit more resistance or support level down there. Probably the market gonna stop down there. If it gets there, it might goes back up from there. We'll see. We'll see. So it is moving average 200. However, the shares of Dollar Tree, we saw that it plunged 14% after the Dollar Tree stores retailer announced its fiscal first quarter results. Anyway, the company said that the revenue rose 5%, with Dollar Tree stores reporting a 4% rise in same-store sales. Yet the company's Family Dollar stores underperformed, posting same-store sales decline of 1.1 compared to the year-ago quarter. Traders didn't like it, investors didn't like it. This week it dropped pretty bad, so we're looking at the weekly. If we look at the daily, then we're going to see this, and we see the huge gap here. The gap is about it dropped from $96 to $88. $8 drop in this stock. So on the daily chart, if you look at the moving average 200, it broke moving average 200. But that chart we're looking, it was the moving average on the weekly time frame. So you have to consider both. It already broke the 200-day moving average here. It dropped pretty hard down there. Okay, let's move on to the next candidate. It is Roku. So in Roku here, there we go. In the Roku, Roku received the upgrade by Morgan Stanley from underweight to equal weight. Solid user and monetization growth combined with recent multiple compression lead us to upgrade shares, wrote Swinburne, who said that the Roku is growing into its valuation analyst by Morgan Stanley. So anyway, so Roku was going up. This is the daily chart. Let's have a look at the weekly chart here. We're looking at the weekly here, and see, it's pretty nice. It went up there, and this week it dropped, but last week it was keep going up. It retraced from this high, $58 to moving average. Fibonacci level 61.8%. Okay, let's look at the daily chart here. So in a daily chart, I have the moving average 100 here. So it was down here, it retraced back to moving average 100. It went a little bit higher than moving average 100, but then it starts going down. So I think I'm not sure about the Roku. How are they going to compete with Netflix? Netflix is a big one. It's a monster. It's going to be difficult for them, but I think some people like it and they're buying their stuff. They're buying their services. But I'm not sure about it. I'm a little bit bearish on this one, and I like to see if it's coming down. If it's coming down a little bit more, I'm going to short on this one. All right, let's move to SQ. All right, SQ is the hot one, very hot one. I had this Fibonacci level drawn before long time ago. I draw this Fibonacci to this level beautifully it retraced back to 61% of the Fibonacci level, which is one of the very critical Fibonacci levels. It went back up again, and it came back down again, touched it, it's tested it again, and then boom, it went up all the way. So SQ, there was an analyst in Needham that raised his price target on the SKU to $65. So right now SKU is trading about like $60 here, $59.41. So he raised his target to $65 due to company's updated outlook. It is important, yes, company's updated outlook. Square on Thursday raised its revenue forecast for the second quarter and full year based on its recently completed acquisition of Weebly, but lower its full year adjusted EPS forecast. Okay, so it's good. It's good for traders. And look, it broke this high. This is very important. It broke this high here on a daily chart, and it's keep going up. It's far away from moving average 200. These are the other moving averages that I have on my chart, but basically I'm using this for the short-term analysis. But mostly I'm looking right now at moving average 200 for the long term. Anyway, so if we look at some technical stuff here, SQ, the 52 days high, the 52 weeks high is at 60.26, so consider it a resistance up there. Just be careful with this. Maybe you want to look for a pullback and then get into it if you want to buy, but this is definitely a strong stock, so I don't recommend for shorting this stock. I don't look into it. And the 52 weeks low is around $22 here. So very, very strong stock, very good stock. All right, so wait for it, wait for a little bit pullback and then get into it. This is the daily time frame we're looking at. All right, let's move to next one. It's the very, very hot one. Everyone dealing with it. I was bearish on this when it starts going down. Before I was very bullish on this till it went up to 65, around like, I'm sorry, $64, this area. Above $64 became bearish because it was a resistance here, right? There's a resistance here, and then it was everybody wanted to sell up there. Now the share of micron technology fell 8% back that day. Unfortunately, they received a bad review from analysts at Morgan Stanley, and the analyst downgraded its rating on Micron from overweight to equal weight. So it dropped pretty hard. It was keep going down and then opened with a gap down here, and it started going down. While it was going down, it was around, I'm not sure, I'll let you know. I wrote a review on it and shared on the stock to it, and I wrote that it probably will go lower and fill up the gap here, and it go lower to probably 38.2% of the Fibonacci level, which it did. So here's the post I wrote on stock tweets on May 31st, and if I bring it up, yeah, it was $62.57 back that time, and I wrote, yeah, it might go down there to 38.2% of the Fibonacci level. So at this level, it could easily come down because of stops, executions, and maybe even try to fill the gap at 38.2% Fibonacci level. Of course, the stock is going down. There were some buyers, there were some back holders up there. Now their stop is getting triggered, and that causes stock to go lower and lower and lower. So I'm sorry, excuse me. So we are seeing resistance right now in 57 area and also 59 area. Till it's not going above 59, I'm not gonna be bullish on this one. I'm still bearish on this one. I think it might come down a little bit lower, even come down here around this area, or maybe for a couple of days start consolidating here, because many people lost money here, and institutions also sold here, and it came down. Yesterday it was trying, yesterday on March 29th, it was trying to, I'm sorry, 31st, it was trying to go up and break above $59, but it couldn't, and it dropped lower and lower and lower, and today it went down to 57. So at the end of the day, or during the day, people start buying, and the stock went up a little bit, recovered to $58.74 dollar. And if you look at some other technical stuff, we can see the MU here. We can see the 52 weeks high is $64. So stock went up there at 52 weeks high. And yeah, investors and institutionals thought we better sell our stock here and we make some money. And when it goes down, they're going to buy it back there. MU is a good stock. I mean, I'm not saying it's a bad stock. Right now, I'm bearish on it. It goes a little bit lower, I love to buy the stock. But right now, if I see any opportunity, I'm going to sell the stock and be bearish on it. There's nothing wrong to be bearish, nothing wrong to be bullish. So don't fight with each other on stock to it. All right, let's move on to the next stock, which is KMI. KMI is Kinder Morgan, is an energy infrastructure company. The price target cut to $21 from $23 by Morgan Stanley. It's going up. I like it. It might have some. We might see some resistance here. It broke 38.2% of the Fibonacci level when it retraced. Came back down. Went back up again. Came back down. There's a double bottom here, and it went back up and it broke this area, so it's keep going up. So I might look for some retracement, but in short retracement back down here, this area, and then probably it goes up. I'm looking for this to go up, probably touch its moving average 200. It's not far away though. Right now the 200 moving average is sitting at $17.50. So yeah, it might go back up there. It might a little bit go higher than that one. So if that goes up to that place, I might look into the short positions. Right now, stochastic is very bullish on this one, so it shows it's going up, and we are seeing the volume is picking up. Here's the volume for the daily chart. Let's have a look at the weekly and see if there's something interesting up there. So weekly is the weekly is downtrend. So in general, I don't trade the weekly because I'm a day trader. I only look for the day, and then I trade in the 2 minutes chart time frame. Anyway, so this is my outlook on this one. So it retraced back to 38.2 and then broke it up. Might go a little bit higher. So what we are going to see some resistance around 1730, 1750, this area. We also have the moving average. Now let's move to the next one. It's a PAGS. PAGS, it was this weekend we saw it came up, and big moves, especially on March 30th. Um, I'm not sure how do you spell the name of this company. It's Portuguese, Brazilian companies, but PagSeguro, if I'm not mistaken, reports first quarter result net income reach at 148.5 million reais. That's the currency, and they were up 144% compared to first quarter in 2017. And the net income for the first quarter 18 reached to 223.9 million reais, up 255% compared to first quarter in 2017. But I don't know, it dropped pretty hard that day, but obviously investors, they liked it. Day traders, investor, all of them, they liked it. I shorted the stock here around 31 something, and I made some money here. I closed my position because I don't keep the positions overnight. Thankfully, I've closed it because it went back up. But I think when it dropped down here, if you look, this stock back that time in the February 2018, it was around like how much? $29. So obviously, if it dropped, when it dropped to that level, investors and traders liked it. They feel it's discounted, and why not? Let's buy it. They bought it, and it went back up. And wow, this couple of past days, it went back up. And then here they sold it. They were probably these buyers here for the previous day. These buyers sold it here. They scared. It's a weekend. Let's get rid of it. We're at 35 level, so why we're gonna hold it? No, let's gonna sell it. It dropped back, but then next day some other investors picked it up and went up. So in a daily chart, it seems it's coming down here, but now we are seeing big moves like this. So this is going to be dangerous. So just wait for it if you want to trade into it. So if I draw a line here, a trend line, I see it's coming down like this, and we can draw another line here. So these are the resistance area, right? The general resistance. So but with this week here, I'm not going to buy around this level. No, definitely not. I'm not going to take the risk. But I look into the sell positions. I would like to be bear on this one. So if it goes up to these levels, I'm going to start selling. All right. Let's move to KORS. Okay, Michael KORS. Oh my God, Michael KORS. Man, they had a strong Q4 result. That's funny. Michael KORS has strong Q4 results, but the shares went down 39% on May 30. They posted solid upside the fourth quarter of the 2018 result, and also issued better than expected guidance for first quarter of 2019. But why? Come on, it went down. I don't know, man. For this past couple of months, companies coming with good earnings, but they get hammered, going down. What's going on, market? I don't know. Somebody tell me, please. Anyway, so one reason for the sell-off could be since May 8, shares had popped higher by 11% with the stock trading near 52 weeks high. Let's check. So 52 weeks high, $70. See, we're at $70 here. So stock was trading here. It went up there to $70. Then also here, so it tried it again, but it couldn't break it. Therefore, I think it dropped at $70. It couldn't go higher. So they get tired. I mean, I don't want this share anymore. It's not going up. Let's sell it. And they all started selling the poor Michael Kors went down. So that's the thing, I think. Sell the news type of reaction could be played here, right? KORS is expecting both first quarter of 2019 results to be about flat. That's a bad thing. Following a 2.3% increase in Q4 compensations. That's not the good news, definitely. Nobody wants their stock, and as far as the revenue, those stuff to be flat. Oh, make some money for us. Market is greedy. Market is needy. Okay, let's move on to next DSW. Okay, DSW reported better than expected fiscal first quarter earning and revenue while keeping its outlook unchanged. Unchanged. And that hammered the stock, I guess, is going down, it's going down. But overall, in the daily, it was keep going up. A strong stock. I definitely look for some long positions here. I'll wait for it. Let's draw a Fibonacci for you guys here. By the way, I'm using TradingView. So if I draw a Fibonacci level, oh, look at this. I missed this one. So the stock retraced to 61.8% of the Fibonacci level beautifully, and then it went back up. Yeah, I'm gonna stay positive, bullish on this stock. It's above moving average 200. It might a little bit come lower. I'll look for the opportunity. I think 23.75 is going to be a resistance, like a support for this stock, but not very strong. So look at this. This is the area of the consolidation here. Let me draw something for you guys. So this area is a consolidation area. So I think it's going to consolidate a little bit here in this area, and then from there we're going to see it goes up or it goes down. It probably might come down a little bit more and try 61.8% again, and then goes back up. So that is DSW. All right, let's move to next one. Next one is DKS, the exporting. Oh my God, this. So we have seen this this athletic retailers one by one, they are falling to bankruptcy, and it's so bad since Amazon. Guys, support your local stores, please. Yeah, you might pay a little bit more, but then you're gonna pay somebody else's salary, somebody else's. Please support these retailers, man. If do not buy everything from Amazon. Just when you're going to buy something, just go to the store, feel it, touch it, and then buy the stuff for yourself. Please, I'm begging you, support your local store. Do not buy everything from Amazon. Do not buy everything. Some stuff good, buy it from Amazon, but for a couple of dollars, that's not that much of a matter. Just go and buy your stuff from your local retailer store and support them. Support them, man. All right, so we know. Excuse me. All right. Anyway, the shares was going down a little bit, but all of a sudden, I'm happy. I'm happy because they need support. It jumped. The exporting goods, they were surviving, man. They are surviving. Their shares jumped after earnings. The earnings beat, the guidance raised, and blah blah blah. Very good. I like it. Hopefully, it gets back up. I'm getting emotional here. All right, so I better not. Anyway, so let's look at it. Well, this is gonna be definitely, you guys want to look at this as a support here. This area is support. This area is support. Let me make it in a color, make it a little bit bigger. So this area is support. Look for it. If it goes lower than this, wait for a retracement to this area probably, and then you can short it. Okay. But if it resists, you see the stock is sort of a flat. It's not going anywhere, but you can probably go and buy this stock and make some money. I don't like to stay on this for a long time. I'm looking for day trading and stuff. But it's gapped up. Could it fill the gap here? It's a resistance area, so might start going up. I'm sorry, it might start go up again. So for DKS, that's it. The guidance raised. They beat the earnings. Very good. All right, guys. Again, this is Benjamin Arbab, and thank you so much for your time and watching my video. If you did like my video and would like to receive more updates, please click on subscribe and like button down there. I promise I'll do better for you next time. These are my first videos I'm posting for you here, and I hopefully get better. Please support me. Thank you so much. Goodbye, and see you next time.